It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, July 20th, 2016. Cranking our way through this third full week of the month of July. Hope you're having a great week so far. Another day filled with opportunities comes to an end, but we're only moments away from the opening bell in Asia. And boy, tomorrow is setting up for another big session filled with reliable trading opportunities. Crude oil and the S&P are bullish, while gold and euro are bearish. We got a big Thursday session right around the corner. Got some charts to go over. We got some news to cover. Before we jump into our newsletter here tonight, I do want to remind you the only place to watch the full-length version of our video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video, right? Only a small portion of this newsletter. Follow that link. Come over here and join me on the blog at sidewaysmarkets.com. That way you can watch the full-length version of this nightly newsletter. While you're here watching the video, don't forget, if you're not a member here at School of Trade, I got a free pass for you. Grab your free pass in the upper left-hand corner. Come out and join me as a guest for a few days this week or next in our trade room. Right below the video tonight, lower left-hand corner, don't forget to register for the mailing list. Name and your email address is all I need from you, and I'll send you an email every evening when our nightly newsletter is ready to be watched. Also, you can download all the charts for tomorrow right below the video tonight. Follow that link right below the video tonight on the blog, right where it says click here to download today's charts, and you can have all the charts on your computer ready for tomorrow. And as I always remind you guys, we have one of the best free trials in the business. You'll learn more with me in 1 week on my trial than you will anywhere else on the interwebs. Join the free trial on the right-hand side of the blog. And if you have any questions, I'm always here to help. Hit me up on the live support button on the right-hand side, right where it says hello. Hope you guys are having a great week so far. I got a busy schedule for tomorrow, and we got a bunch of opportunities coming right around the corner. Let's take a look at the schedule for tomorrow, Thursday, July the 21st. We got a busy schedule. It's all going to start middle to late morning in London. No major news from the Asian markets here this evening. And of course, we'll go right into the retail sales tomorrow morning at 4:30 a.m. That's going to kick it off tomorrow morning, 4:30 a.m. That's going to be the first major news of the session. And boy, we have definitely been seeing this news coming out of Great Britain has been a market-moving event. We have no reason to think this won't be tomorrow. The big news tomorrow, though, will be at 7:45. We got the ECB announcement tomorrow morning. You know there's going to be some fireworks there, so pay close attention to that time. Remember, don't get caught trading the volatility from that news, right? Trade the reaction to it. Wait for that news to come out and then trade the reaction tomorrow. 7:45 a.m., just before we open up our trade room tomorrow morning at 8 a.m. Eastern time. And of course, I'm sure we'll be getting some of the blowback, right, from that news event. That's going to be the biggest news event of the session tomorrow morning. And then, of course, we got jobless claims at 8:30. We got Philly Fed at 8:30. They are listed as market movers, right? I'm not expecting them to be as important as the ECB announcement tomorrow. But again, they are Red Star News. They are market movers, so we will be paying attention at 8:30 a.m. And then, of course, we have a little hop, skip, and a jump down to existing home sales tomorrow at 10 a.m. Eastern time. That'll do it until we're back here tomorrow night talking about the news the news tomorrow night, and of course into Friday's session. So 10 a.m., 8:30, 7:45, and 4:30 should be a relatively quiet one in the Asian and early London session. But heads up though, as of 4:30 a.m. into 7:45 and into the U.S. session, we get some big news on the calendar. Remember, news is noise. I really don't care what the news actually is. All I need to know is when the news comes out. Give it a few minutes after the news comes out, let the volatility subside, and then find that direction, formulate the game plan, right, and attack the game plan. All right, that's what we do tomorrow morning with all of our students in our trade room, opening up at 8 o'clock Eastern time. Let's get at it here. We got crude, S&P, gold, and the euro. Crude is bullish after today's inventory report. But the spiking channel tells the bears they have a small window of opportunity before the bulls look to re-enter this market back in the correction zone. The day started off with a strong move lower for the bears, but they couldn't hold it after the inventory report was released, and the bulls easily pushed back to the highs for a double-up target right around that $46 a barrel. The session finished with a spiking channel and a short-term bear wedge, both of which tell us that price is likely to pull back to the correction zone before we see the buyers re-enter with a target back up to those highs. Bears have a very small window of opportunity, but they need to hold this next pullback, and if they can, they better get to it quickly because those buying opportunities will start coming up around that 45.20, 45.34 battle zone and correction zone waiting below. Really, in my opinion, the most important things we see on this chart right now are going to be the spike in channel, that bull spike in channel that we see here. That spike in channel gives us the correction zone. And really what a spike in channel really tells me is that we're definitely bullish, and I want to buy the dips. I want to buy the dips. And really right now, there are only two spots right now to really buy those dips, those prior swings. Right? We've already got below one of them. That was a little bit too close for comfort there to that area of resistance. But as you can see, though, we got that prior swing here. We just tested. The bears have to hold this pullback or else the buyers are going to go right back up to that high again. Now, of course, if we can't hold there for the bulls, we'll look for that pullback now back to that 45.21 area. The most reliable trade right now for the bulls will be after a pullback back into that correction zone, 45.21, 45 even, then of course a move back up to the high of day. Now the bears have a challenge right now. They get a very bullish market going into the closing bell today. They got their double up, right? They got their double up. In fact, they trapped low and revisited. So now the bears have a shot here. They've got to hold this pullback to the moving average if they're getting a chance to go back down to that low. There's a bear wedge here. And that bear wedge gives those bears a definite target. And you can see right where that target lines up, right at the trend line, right at the battle zone at 45.34, and of course, the spike in channel correction zone. If you're a bear right now, you want to see this market hold this pullback for a move back down to the correction zone. If you're a bull right now, you want to see these sellers fail to hold that pullback and then punch up back to that high with a seller failure. If the bears do hold this pullback, then we go down into the correction zone, into the battle zone area. And then from there, obviously at that point now, it will be a bearish market. So there's going to be a few opportunities for the bulls. The first and most aggressive opportunity will be a seller failure, buying into the stops of those bears. The more reliable, more conservative buying opportunity will be that next pullback. Right, holding that next pullback. So either for the bears, the bulls, looking for that seller failure or buying that pullback for a move back up to those highs right now. Honestly, I think it all comes down to what happens at this next pullback, right? Do they hold this next pullback? Because if the bears hold this next pullback, then they've got their window back to the trend line, back to the correction zone. But if they can't hold the pullback, right, then of course it makes it very, very easy now to see a move back up to retest those highs again, and then away we go for a possible triple up and triple measured move going into tomorrow's session. Obviously, if the bears can hold this pullback, right, then of course that puts us down into the correction zone, and then from there it's going to be seller failure, right, seller failure for the first buying opportunity, then of course into that pullback for the bulls for the more reliable trade back up to those highs. Bears, if we can get through this correction zone and we can hold the downside, nice big target waiting for us down around that 44.60 to the downside as well. We got to get through, though, that correction zone and hold that pullback if we're going to have any chance here to get a test of that low of day. All right, guys? So in my opinion right now, definitely the bulls have the overall edge, but the bears can take that short-term window and hold this pullback right now. It's all going to depend on what happens here in the short term, and that will give us more of a roadmap, clearer road here before we go in the long term. Next up here on the S&P. S&P's bullish and trading inside a range. Just a few ticks below the measured move this evening. The bulls finally got the move they wanted off the lows of the range from last night's newsletter and made new all-time highs. Boy, impressive, before they finished the session in a narrow range with a bull bias. The new all-time highs quickly remind us of what happened over the last week of trading. Remember what happened the last few days here? Avoid buying high and stay patient to buy the dips with traps and failure setups. The trading range and the wedge give the buyers levels of support and resistance to work with as they look to buy low and take profit at the highs. The sellers need to be very careful right now because we assume that every pullback is going to be a buying opportunity for a move back up to those highs. Now, as you can see right now, there's a few different clues on this chart right now, but there's really no question about who has control of this market. The bulls have complete control. We finally got that move back to the high of the range that we talked about in last night's newsletter. You know, it's always important that you watch every evening. That way we can build on the lessons from evening to evening. Well, here we have now a measured move. They are just an inch away from that measured move. This does not happen very often, that we barely miss that measured move. So clearly these bulls are reacting to something, right? What's keeping them from reaching the measured move? It's probably the fact that we're at new all-time highs. And if this, again, if you look left and you look back in time and you see what happened when we got new all-time highs over a week ago, what happened? Every time we went back to the high day again, it faded off those highs. So we can expect to see more of this. Trap low, back up, trap low, back up, trap low, back up. Very similar we talked about on gold last night and what we have showing up here on the euro as the euro tries to move back to its big round number. So best opportunity right now, it's a little bit foggy. You know, we definitely have all-time highs that create a little bit of some chaos in the markets. All-time highs, by the way, are always going to be some of the most challenging environments because a lot of emotions go into all-time highs. Okay, a lot of emotional response to fresh all-time highs or all-time lows. Right? Believe it or not, it's always going to be a more challenging environment you're trading in. Right now, bull wedge, right? The bull wedge tells us to look for traps, right? To look for traps. And again, we assume that everything that dips down will be bought right back up. We assume everything that dips down will be bought right back up. Now, with that said, as the market moves lower, what are the buyers supposed to do here? Well, I talked about this on crude oil. There are ultimately two main components to it. First of all, as the move pulls back, we look for seller failure into buyer strength. The buyer strength comes from the sellers being stopped out of their positions and being forced to buy their way, cover their short positions, which of course are buy orders. That buyer strength now allows the buyers to buy the pullback. So you've really got a few different opportunities here, right? You've got the failure, the strength, or the pullback. What's the most reliable? The pullback, right? The pullback will always be the most reliable because at that point, a bear market or a bear short-term market, right, becomes a bull market again. So as this price pulls back, just like we talked about on crude oil, right, we have to expect those areas of support to result in seller failure, buyer strength, and a move back to the high. Back to the battle zone, 62.5. Seller failure, buyer strength, pull back to a new high, even all the way down to this 58.5. I would imagine that will be pretty much the line in the sand there for the buyers, right? They're probably not going to try if it goes and stays below 58.5, but that will be another spot here for buyers to be looking to enter into this trade. Again, just simply wanting to be part of this bull market, but not wanting to buy all-time highs. Right? Makes sense to me. Hopefully it does to you as well. Don't forget, as this market goes higher, that measured move is going to be a target overhead. And then heads up with this trading range. This trading range is a very important piece of this puzzle because if you take that range and you project it lower, you get support at 63.5. If you project it higher, you get a new target overhead for the bulls at 21. We'll call that 21.73. So definitely the bull market right now. Breakout pullbacks, I do not trust, right? I would not trust a breakout pullback at all right now. Not where we are, right? Not where we are. You know, again, if it does happen, then, well, lucky for the bulls, right? But historically speaking, buying all-time highs right at the high, probably not going to yield a very good result. And again, there's no way of telling what's going to happen in this particular example. But remember, day trading is nothing more than a pattern recognition probabilities game. We know the probabilities at that all-time high are going to be very low. Right? And again, it doesn't mean the next push through can't spike right on through. But again, I want to remind you, if you look back in time here, what sparked this move back to all-time highs